Welcome to Biz with Rich. I'm Rich, editor of Under the Radar Report. Well, Christmas is approaching, and this week's beer is brought to you by lovers of Cerveza, or Cervezas, and West Australia's own Little Creatures Brewery. Let's crack it! Oh, I'm cracking it. Viva Argentina. In the World Cup. Can't escape it, even on Beers with Rich. It's not bad. Little Cerveza. All that electricity everywhere. You know, people are going to be watching everywhere in the world. That requires a lot of energy, which is my next toast. Don't put the beer down. To Pilbara Minerals, Karoon Energy, Paladin Energy. Some of the stars of 2022. Each producing returns of well over 100% a year for the past few years. That, my friends, is value. Pilbara, of course, is in lithium production. Karoon, small cap oil and gas producer. And Paladin's a nuclear developer, or a uranium developer, soon to be producer. So that's what investing is about, people. The future. Here's to the future. And that's one of the reasons we've done well this year in some of our calls, particularly on the commodities front. You know, commodities have really been supercharged this year, you know, by various factors. But one of them is just a lack of supply that I've talked about. But talking to a number of fund managers this week, more than usual because we've got our round table coming up. And it's clear that they profess not to invest much in mining because they don't have that expertise. Luckily, that's not the case at Under the Radar Report. Electric cars aren't made of thin air. In order to position your portfolio for the future, you need and take advantage of that future electric car demand. Buying certain commodity producers is the key. It's the way to go. It's what BHP is doing. It's what South 32's doing at Spin-Off. It's what Rio Tinto's doing. Read all about it in this week's Blue Chip. But if you want bigger leverage, you need to own more focused producers like the ones above. And this week we include 3 such focused producers that are slightly earlier in the curve than those guys and arguably have more potential. In the week after that, we've got 3 more. That's right. Waves of 3. So, talking energy when you listen to the big regulators, like the point that I'm making is, you know that the transition to renewables, to zero carbon, isn't simple. It's very complicated. You know, even the most intelligent people in the world can't seem to sort of grasp it at times. And there isn't going to be just one solution. There's going to be a mix of assets that are going to be needed, and that's why this week's we include a lithium developer, a gas producer, and a uranium developer. You need diversity, because that's what's going to happen in the real world. You need to replicate that in your portfolios. And getting back to the fund managers, well, it's clear they haven't had an easy time of it in 2022. Some seem, dare I say it, jaded. What's also clear is that they're on the hunt for stocks. These guys are hunting because they see value. On the bigger picture front, I was reading The Economist this week, and I think it's what we've been saying. They talked about the new rules where basically the era of higher interest rates for longer is upon us. And this has big implications, as we've been saying all year, for investors. But basically what they're saying is, without actually having said it in the article, is that the savings glut talked about by Ben Bernanke back in 2005, that's certainly waning. That's ebbing. And that's why we're seeing kind of less pressure on interest rates. And that means when interest rates go up and when they're higher, you need more patience. Like, it's not a matter of playing this momentum game where you can just get in and get out, like pyramid selling. No, you need to get back to what it is that these companies do, what value they're producing, how quickly they can return capital, return how quickly they can give you the product of their returns, aka dividends. And that's the key to making the money in the longer term, and that's been proven time and time again. At times it seems to be on the outer, but really over time it's a truism. It just keeps coming back, and that's why we embrace it. And the pain that these fund managers have been through in 2022, they know that means that expected returns of the stocks has increased. Before those expected returns, they were all embedded in capital prices. They were basically capitalized. So you were taking today's gains for tomorrow. Now tomorrow's gains are less certain, so they're not as priced in. So it's a stock hunting environment. Don't get me wrong, it's going to continue to be a bumpy ride. Partly where beer comes in. But it's about picking those stocks that can deliver value faster. That's what I'm talking about. And we continue to see small caps and big caps and blue chips that are worth investing in. And that's why we've actually upped the ante and we've initiated coverage on more stocks than I can remember in recent weeks. And as I said, coming up, we've got the second part in our energy series. And we've got trading tips and investing tips coming your way from our portfolio managers. So there's a lot to hang on to, a lot to look forward to, to put under your Christmas tree. The beer, little creatures. Well, tried and proven craft beer. WA's own little creatures. And like other breweries, these guys will try their hand at anything to make a buck. Why not a Mexican Cerveza? It's as close as I could come in the bottle shop to the Pampas. Go Argentina. See you next week for our Christmas special.